12 best investments for any age or income. Investing is a word that can sound pretty intimidating to young people. Most people think it's something only older, more established, and more wealthy people do. But the truth is, the earlier you start investing, the better off you'll be down the line. There are so many ways to invest money that anyone can do it, regardless of income or age. We will introduce you to the 12 best types of investments that you should consider correctly, ordered from lowest risk and lowest returns to highest. High-yield savings account. A high-yield savings account is not only the easiest type of investment, but it might be one you have already. These are just your interest-accruing savings accounts available at most banks and credit unions. You could also open a cash management account with a brokerage firm that offers a little more flexibility and maybe a higher interest rate. They're best for short-term savings or for emergency funds. A good investment rule for beginners is to try and keep 3 to 6 months' living expenses in this account before branching out to other opportunities. If you enjoy videos on investments, insurance, finance, loans, and mortgages, you'll love following the Money Trace channel. You can support us by hitting the subscribe button and the bell icon to be notified when we release new videos. Please also hit the like button if you find this content helpful, so that YouTube will spread our message to more people. Certificate of deposit. A certificate of deposit, or CD, is another kind of savings account, except it's insured by the federal government and will have just one interest rate for the entire life of the account. You can get these at most banks and credit unions as well. These are great if you're saving for a specific point in the future, like if you want to buy a house in 5 years. That account can last for that 5 years and will build interest at an insured rate, regardless of the market. Just make sure you're prepared to have that money inaccessible for that length of time, because ending things early will likely have a fee. Money market mutual fund. A money market mutual fund, not to be confused with a money market account, is an investment product where your money buys a collection of short-term, high-quality debt. While these mutual funds are safer than stocks, they carry some risk. However, they tend to be government, bank, or corporate debt, which are much less likely to default. These are good for investors who want to keep access to their money, but are willing to deal with a little more risk. Investors shouldn't expect the potential for higher returns like other investments in this list. The returns in money market funds are more similar to high-yield savings accounts. The easiest way to buy these funds is through an online brokerage. Government bonds. Government bonds are loans from you, the investor, to a government entity like a federal or municipal government. They can be purchased from a broker, investment bank, or the government itself. They pay interest on the loan over time, typically between 1 to 30 years. This investment is called a fixed income security due to the regular interest payments. These bonds are almost without risk, as they're backed by the full faith and credit of the U.S. government. Sadly, this also means the returns won't be as impressive as other investments. Corporate bond. A corporate bond is much the same as a government bond, except the loan is to a company rather than a government. Since they're not backed by a government, they are higher risk, and if you invest in high-yield bonds, or junk bonds, they can be almost as risky as stocks. Fixed income securities of this type tend to have higher yields, but they also carry more risk. The more likely the company is to go out of business, the higher the yield. The process to buy corporate bonds is similar to government bonds. Here at Money Trace, we've already done the heavy lifting and researched the best investment partners for you. You can click right now on the description link below and get the best partner. Just don't forget to come back for more important tips. Mutual funds. Mutual funds pool cash from multiple investors to buy stocks, bonds, or other diversified assets. Mutual funds tend to be the most inexpensive way to have diversified investments. It's important for investors to have diversified assets, so if any one investment experiences a major loss, it won't be a loss to the investor's entire portfolio. Investing in some mutual funds can be complicated, and they typically demand a minimum investment of $500 to thousands of dollars. However, there are some that allow automatic monthly payments in lieu of an initial investment. In any case, the easiest way to get started is to approach the companies who manage them directly. Index funds. Index funds are also mutual funds. However, they only hold stock in a certain market index like S&P 500 or Dow Jones. These are some of the best investments for long-term savings and young investors, due to lower management fees and less volatility as they more closely follow the ebbs and flows of the market. The best way to invest in an index fund is through the fund providers directly or through a discount broker. Exchange-traded funds. Exchange-traded funds, or ETFs, operate like mutual funds, but instead of pooled money, investors buy shares into the ETF the same as they would for any stock. The biggest difference that would attract investors to this fund rather than an index fund or mutual fund is that ETF share prices may be lower than the fund minimums, allowing investment with less capital. Like stocks, ETFs have ticker symbols and are available through discount brokerages. Dividend stock. A dividend stock is a stock that can provide a fixed income of bonds as well as the growth of stocks and stock funds. The best of these stocks tends to be bought from companies with stronger track records of consistent dividend growth. An investor begins with modest yields, but could increase if the dividend growth remains consistent. Like most investments on this list, dividend stocks can be most easily bought with an online broker. Individual stock. An individual stock represents a share of ownership in a company. These stocks offer the largest potential return on an investment, but also carry the highest risk. It's important when investing in individual stocks, or playing the stock market, the investor has diversified their portfolio or buy stocks through a mutual fund. It is often easiest to purchase, like through an online discount broker service, but it is usually recommended that individual stock holdings comprise 10% or less of an investment portfolio. Alternative investments. Alternative investments include assets like gold, hedge funds, stamps, trading cards, private equity, and art. More recently, they can also include cryptocurrencies like Bitcoin and Ethereum. These investments increased in popularity starting after the Great Recession. It is common for alternative investments to experience the most volatility of all other types of investments. Alternative investments can sometimes be purchased through online brokers, but most of them are only available through private wealth managers. Real estate. Finally, real estate traditionally involves buying property and selling it for a profit in the future, or collecting rent as a fixed income. However, real estate investment trusts, or REITs, allow a more hands-off investment. REITs are companies who own properties like malls or hotels that generate income, allowing dividend payments for investors. More recently, crowdfunding real estate investments has become more popular. Some of these REITs can be purchased on the stock market, but some are private. We love to create animated videos to help people like you. Hit subscribe and the bell icon to follow the Money Trace channel. By becoming a part of the Money Trace community, you won't miss our latest videos. One last tip, we've selected 2 other videos that will expand your knowledge even more. Enjoy!